Recording in progress.
Hey, what's happening, everybody? Good morning, good afternoon, good evening from wherever you're watching this. Hey, thought I'd send you an update, sort of an October market update. There's been a lot of news media attention on interest rates. And I'm sure that's prompted a lot of you who may be considering buying, selling, or investing in real estate to take pause. So with all the noise, it sometimes helps to get the real data associated with what's going on and maybe a little bit more of an educated opinion reference what's going to happen moving forward. But clearly there's a transition in the marketplace. A lot of it is driven by the higher interest rates. So let's just talk about some of the fundamentals, why this is happening, okay? You may recall, if you saw one of my last videos, that as inflation rises, the Fed has to raise interest rates to try and control that inflation. We still have a lot of active spending within our marketplace, and that is causing inflation to move at unbelievable numbers. The only way to control that inflation is to slow the economy. The way to slow the economy is to raise interest rates for borrowing, okay? They have to get interest rates in front of the inflation rate in order to slow it down. Once that takes place, we'll start to see drops in interest rates. So then you say, well, maybe I should wait until we drop on interest rates. Hold that thought, because we'll come back to this towards the end. So what happens when you have a changing market, right? We've been a very hot seller's market up until that sort of April mark of this year. Okay, October now. So what happens during a transition market is the very first thing that happens in the market is prices drop. After prices drop, the next thing that happens is days on market increase. Days on market meaning how long a home sits on the market before it sells, okay? So we are seeing a double and triple the amount of days that a home is sitting on the market right now. And again, a lot of that is driven because market people have sat back and said, hey, I'm going to wait. What's going on with interest rates, okay? Well, the third thing that happens, so we've already seen that, right? So we have prices drop. We've seen days on market increase. The third thing that happens in this transition from a seller's market to a balanced market, meaning just as good for buyers and sellers, is sellers start giving concessions. So we're seeing a lot of that in many of the transactions today. So what we mean by seller concessions is that the seller is often paying for closing costs for the buyer. A lot of the times they're also contributing towards helping a buyer buy down their interest rates. So with interest rates nearly at 7% today, that's an expensive payment, nearly double what it was, say, 9 months ago. But what we've been able to do in this market is have buyers, have sellers pay for buyers' rate drops, so get that payment more to a manageable payment. Okay, so that's what's taking place in the market. We are now officially, it depends on which price point you're buying in. It depends on the whether we're in a buyer balanced or seller's market. I think we're out of a seller's market for everything. Right now, I would say we're very much in a balanced market. 3 months of inventory is what we call a buyer's market, a balanced market in Arizona. So in some price points, like the median price point today, median price point in the Arizona market today, year over year, is $439,000. Okay, median, not average, median. So at $439,000, there is 3.4 months of inventory. So slight buyer advantage in terms of buying in the market today for that price home. What is fascinating about today's market is we're seeing homes sit on the market a lot longer, right? And there's a lot more homes to choose from. But what's not happening is we're not seeing drastic price drops, especially even on year over year basis. Just take this number, for example. Okay, we take October of 2021, last year, 1 year ago. The price per square foot for this price range home, the 439 home, was $210. Okay, today in October, the average price per square foot for the median price home is $242 per square foot. That's a 14% difference between last year and this year, okay? That was even higher earlier in the year, right? So we are seeing some drop in terms of the annual appreciation rate. But You know, when they asked all the experts nationally what they thought was going to happen in 2022, we had numbers as high as 14, 15% and as low as, I believe it was something like 6%. This is from CoreLogic, National Association of Realtors, Fannie Mae, all these ones giving their predictions. I think the average of the leaders who were giving the interest rates was somewhere around 9%. Okay, we are doing even better than that in the Arizona market, and I think we will continue to do well. But let's just be very conservative. If we're looking at the Arizona market across all price points, the average appreciation rates is 4.87% over the last 20 years. Okay, I think we're going to do even much better than that moving through the next year. But why do I mention that? And in most basic terms, okay, let's just call it 5%. Okay, 5%. So that means how much the price of your home will grow by 5% year over year. So whatever money you put into that home is going to not only that number growing, but also you're going to get the appreciation of the full value of that home. So at let's just say you're buying the median price home at $439,000. Okay, if you increase that by 5%, you're nearly $22,000 a return on your investment. Meaning, in 1 year, if you sold that home, you'd make $22,000 on that home just by being in the market. Now, tell me where you put your money in. You know, if you put it in bonds, you leave it in the bank. God forbid the stock market right now. You put it in there. I don't know how you're going to achieve that type of return by leaving your money in the bank or these other means. Okay, you cannot go wrong long term with your money in the real estate market. So please consider that. The reason that we are not seeing drastic changes in the prices of homes is that we still have a significant gap in the number of homes available. Yes, there's a lot of homes on the market, lots to choose from, but there's still not enough homes for the existing population within Arizona, let alone everybody who's moved here from California, Oregon, Washington, Illinois, all those big states that we had migration from. So that is a 14-year gap. They have not built enough homes for the existing population since that 2008 range, 2007, 2008. It's about 14 years, okay? And the gap was so significant that that gap is not going to be filled over the next year or even 2 years. We do not have enough new home starts to meet the existing population's needs. And that is simple supply and demand. So yes, you have lots of options in choosing out there. Yes, interest rates are higher. There are solutions out there for dropping that interest rate. But do not lose out on annual appreciation if you're considering buying in this market. You can't go wrong from that perspective. Anyhow, I have all the numbers to back this stuff up. Happy to share with you. Reach out to me with any questions, and have a great day. We'll see you.